Imagine a world where regular people like you and me had little chance of growing our money. A world where big companies on Wall Street made investing seem confusing on purpose, so they could charge high fees and keep most of the profits for themselves. For many years, that's how things worked. Rich people had all the advantages and the average person was left behind, unsure of who to trust or how to invest wisely. But then one man stepped up. He didn't look like a hero. He didn't care about fame or fortune. In fact, many people in the finance world laughed at him. They said his ideas were boring and would never work. But he didn't care. He believed something very simple: that investing should be easy, fair, and cheap for everyone, not just the rich. He wanted to give power back to the people. That man's name was John Bogle. And what he built, Vanguard, changed everything. His idea was so strong, so honest, that it started a quiet revolution. Today, millions of people around the world are building real wealth thanks to his vision. This is the story of how one man took on Wall Street, and won not for himself but for all of us. Before we dive into this powerful story, please make sure to like this video and subscribe to the channel if you enjoy content that inspires and informs. Your support helps us keep bringing you stories that truly matter, and trust me, today's story is one you don't want to miss. In today's video, we'll take you on a journey through the life of a man who changed the way millions of people invest their money. John Bogle, the founder of Vanguard. From going against Wall Street to creating a new path for everyday investors, his story is not just about finance. It's about vision, courage, and doing what's right, even when the whole world thinks you're wrong. So, get ready to discover how one idea shook the entire investing world and gave power back to the people. Before John Bogle came along, investing wasn't something that was available to everyone. In fact, for most people, the stock market felt like a mysterious world that only the wealthy and elite could access. The 1950s and 1960s were filled with speculation, and many were focused on making quick profits rather than long-term growth. The financial world was dominated by stock picking, something that took expert knowledge, insider connections, and lots of luck. This time, most investors were at the mercy of brokers and financial advisors who made money by charging high fees. The idea of index funds, a low-cost, simple way for regular people to invest, didn't even exist. People were often told that to succeed, they needed to actively choose the best stocks, which involved guessing the right companies at the right time. This speculative way of investing was based on the idea of beating the market and making huge profits fast. But here's the catch: it didn't work for most people. For every person who made a lot of money, there were countless others who lost their savings, all because they were gambling with their investments, hoping they could predict the market. The 1960s were known as the go-go years, a time when everyone seemed to be getting rich in the stock market. People were pouring their money into whatever was the latest trend, hoping to make a quick buck. Unfortunately, this left many investors with portfolios that were unstable and unbalanced. With everyone trying to pick the next big thing, most investors found themselves losing money when the market inevitably turned against them. John Bogle didn't come from a wealthy background, despite his father's early success. Born in 1929, just as the Great Depression was hitting, Bogle's family fell from wealth to financial struggle in a very short time. His father, once a well-paid executive, lost his job and his wealth after the stock market crash. This left the family in turmoil, with Bogle's father sinking into alcoholism and struggling to recover. Bogle and his two brothers were forced to grow up quickly, taking on responsibility at a young age. This early experience taught Bogle valuable lessons that would stick with him for the rest of his life: hard work, resilience, and the need to be self-reliant. It was during this time that Bogle developed a habit of saving every penny, no matter how small. He also developed an ambition to make something of himself, driven by the desire to escape the struggles his family had faced. Despite these challenges, Bogle was determined to succeed. He worked tirelessly to excel in school and eventually earned a scholarship to Princeton University, a turning point that would change his life forever. At Princeton, Bogle was known for his work ethic and ambition, but his journey wasn't easy. Although he had the drive, he quickly realized that he wasn't the only one working hard at Princeton. Many of his peers were just as determined, and Bogle found himself struggling with his grades in the beginning. But instead of giving up, he used his determination to stand out in a way that no one else had. For his senior thesis, Bogle decided to write about something completely unique: the mutual fund industry, which at the time was in its infancy. He recognized that, despite the relative obscurity of mutual funds, this was a field with huge potential for the future. His deep dive into the topic was innovative, and by the time he graduated magna cum laude in 1951, he had already begun to make a name for himself in the financial world. After college, John Bogle started working at the Wellington Management Company, one of the most respected mutual fund companies at the time. He was full of big ideas and worked hard to prove himself. Over the years, he rose through the ranks and eventually became the company's CEO in 1970. It seemed like everything was going perfectly, But things were about to change. In the early 1970s, Bogle made a big business decision. He agreed to merge Wellington with another investment firm to help it grow faster. But the partnership didn't go as planned. The new managers had a very different style. They believed in aggressive stock picking and fast trading, completely opposite to Bogle's belief in low-cost, long-term investing. The conflict between them grew worse over time. Eventually, this disagreement cost Bogle his job. He was fired from the very company he had helped lead. For most people, that would have been the end of the road, but not for John Bogle. Instead of giving up, Bogle used a small part of the company that no one cared much about, the administrative side that handled paperwork and record-keeping. He turned that part into a brand new company in 1975. He called it Vanguard.at. First, people didn't take Vanguard seriously. It had no portfolio managers, no star investors, and no flashy ads. But Bogle had a vision. He wanted to create a fund that would not try to beat the market, but simply match it. And he wanted to do it with very low fees so investors could keep more of their own money. That's how the first index fund for ordinary investors was born. It was a completely new idea at the time, and many people laughed at it. They called it Bogle's folly. But Bogle didn't care. He believed that the average investor didn't need to beat the market. They just needed to stay in it and avoid high costs. Little did they know, Bogle's simple idea would change the entire investment world. When John Bogle launched the first index fund in 1976, almost everyone in the financial world laughed at him. They said it would fail. They thought it was foolish to invest in the entire market instead of picking the best stocks. Most people believed that beating the market was the only way to make real money. But Bogle didn't listen to the critics. He believed something very simple. Most investors would do better by keeping costs low and just tracking the overall market. He thought that trying to beat the market through stock picking and market timing was too risky and too expensive for the average person. At first, only a few people invested in the index fund. It didn't grow much in the beginning, but over time, something amazing happened. People started to realize that index funds actually worked. They may not have made huge profits quickly, but they were steady, reliable, and cheaper than actively managed funds. Bogle's idea started to catch on, especially with everyday investors who were tired of high fees and unpredictable results. Vanguard began to grow, and so did Bogle's reputation. He wasn't just creating a successful company. He was changing the way people thought about investing. By focusing on honesty, simplicity, and long-term thinking, Vanguard became one of the most trusted names in finance. And the index fund, once mocked by experts, became the most popular investment choice in America. Bogle never got rich from Vanguard. He set it up as a client-owned company, so any profits went back to investors, not shareholders or executives. That decision saved investors billions of dollars over the years. Thanks to Bogle's vision, millions of people were able to invest smarter, retire with more money, and have peace of mind without needing to be experts in the stock market. John Bogle didn't just create a company, he changed millions of lives. His idea of low-cost index funds helped regular people, not just the rich, grow their money safely and simply. Before Bogle, most people had to trust expensive fund managers to invest for them. These managers charged high fees and often failed to beat the market. But Bogle gave people a better way. He showed that you don't need to be a financial expert to invest wisely. You just need to keep costs low and stay in the market for the long term. Thanks to him, many people were able to save for retirement, buy homes, pay for college, and build better futures, all without being taken advantage of by Wall Street. Even after he retired, Bogle kept speaking up for everyday investors. He wrote books, gave interviews, and kept reminding people, don't look for the needle in the haystack. Just buy the haystack. That was his way of saying, don't try to find the one perfect stock. Just invest in the whole market and let it grow over time. By the time he passed away in 2019, Bogle had saved investors over $1 trillion through low fees. That's more than any banker, fund manager, or financial advisor ever did. He didn't care about becoming super rich. He cared about doing the right thing. That's why so many people call him a financial hero. Warren Buffett, one of the richest investors in the world, once said that Bogle did more for the average investor than anyone in history. John Bogle proved that honesty, patience, and simple ideas can change the world. John Bogle's story is not just about money, it's about doing the right thing, even when it's hard. In a world where many chase quick profits and personal fame, Bogle stood out because he cared more about helping others than helping himself. His message is clear. Investing doesn't have to be complicated. You don't need to time the market or pick the next big stock. Just keep it simple, stay patient, and don't let high fees eat away your future. If more people followed Bogle's path, we'd have a world where everyone has a fair shot at financial freedom. So today, let's remember the man who stood up for the little guy. Let's invest with purpose, with patience, and with the same honesty that John Bogle showed us. If you learned something from this video, please like, subscribe, and share it with someone who needs to hear Bogle's message. Thanks for watching, and remember, sometimes the smartest move is the simplest one.